Hello. So let's get right into it. A lot has been happening recently. The oil futures went negative, reached negative 40. And of course, the government's trying to pawn the problem off on futures trading, which might have something to do with it, but the actual reason it went negative has more to do with the government than with the actual traders. The Federal Reserve left interest rates too low for too long. And because they left interest rates too low for too long, all of these oil companies, not just in America, of course, in other countries where their central banks left interest rates too low for too long, started borrowing to cover every single problem. Borrowing became the panacea of the corporate elite. Not just in the oil industry, but very much in the oil industry. And because they were borrowing so much money, they then had to keep drilling for oil way past the point where oil was even profitable to drill for, which created a self-licking ice cream cone of expenses and borrowing to cover those expenses, along with the previous debts. So there was a huge oil glut because the companies couldn't stop drilling. They need to keep servicing those debts. And of course, they were taking on more and more debts because they weren't really profitable from the oil they were taking out of the ground. So this kept going because the Federal Reserve and other central banks kept interest rates low. So now there's less of a demand for oil. As long as there was a demand, this could technically have gone on ad infinitum. And there's no real reason it couldn't have, other than the fact that there is always something that comes along and stops something that could happen into perpetuity. That's kind of just how things work. But of course, our government masters didn't really care about the future. They always look at it like it's something far off that will happen after they've gotten out of office. So the oil companies had all this oil that, as far as supply and demand was concerned, was only worth something as long as people kept needing the oil, because really it wasn't worth that much because they had so much of it out of the ground. Now, because of that, and oil prices went negative once demand dropped off because of the coronavirus. There was no way that this wouldn't have happened. And eventually, if it wasn't the coronavirus, it would have been something else. There's always something else. But it was the coronavirus, so yeah, that's about it. So the oil companies in the United States are probably going to tank. And between their over drilling, the fact that they've been doing fracking for the last 2 decades, which is a big money loser. Fracking is not profitable in any way. So all of those bad decisions combined with the borrowing almost assures that all American oil companies are going to go belly up at some point in the near future. And that's combined with Saudi Arabia and Russia doing their best to push oil prices lower, because they want to starve out the oil companies around the world that did do all of this borrowing and did drill up all this oil. Because when the rest of those oil companies are gone, and they can raise prices as high as they like. And of course, Russia and Saudi Arabia both get a lot of their income from oil and gas. So yeah, this is partially a conspiracy by foreign governments, but that doesn't really account for most of it. Most of it was just incompetence on the part of the companies. And I'd say incompetence on the part of the government, but the government did it on purpose. That's not incompetence, that's just malice. So, yeah, oil's in the shitter, and it's probably going to be for a while. No, that said, I did buy some oil. I did buy some oil stocks in oil ETFs. It's unleveraged, of course, because eventually oil prices are going to shoot up massively, because there's going to be a duopoly or an oligopoly on oil from those countries where their oil companies weren't as leveraged and weren't as prone to collapse. And of course, gold stocks have been up. Gold. A lot of people have discounted gold for a long time. But since 2003, gold went from $300 to $1,700 at the present time. To me, it's a sign that gold could go much higher. After all, gold rises with inflation. And that, of course, is going to help the gold mining companies. So I own some gold stocks and I own some gold mining stocks, which have been doing very well recently. They were doing very poorly at the beginning of the coronavirus thing. But now investors are starting to see that they're going to need a safe haven. That this isn't a problem that's going away, and it's not just because of the coronavirus. It's because our economy is over-leveraged and it's bound to collapse. Now, maybe I'm wrong. That is a possibility. But I tend to throw my chips in with history. And historically, when the United States has, or any country for that matter, has had its general populace is just borrowing and borrowing and borrowing, eventually the time comes when it doesn't work anymore. When all the growth gained by borrowing just gets lost. Now, we've had a good run kind of restarting the whole thing after we've had collapses over this. This isn't the first time the national debt as it pertains to the private sector and private individuals has led to an economic collapse. And you can see in the charts, the S&P 500, the Dow Jones, and even the Russell, though to a lesser extent, and go ever upward. But, and how much of that is just inflation, and how much of that is real growth? Oh, I can't say off the top of my head, though I know priced in gold, the stock market right now is underpriced the stock market right now is less valuable than it was, say, 20, 30 years ago. Because gold accounts for inflation. And gold is a commodity that doesn't really have huge ups and downs. It's just on its own. In large part because people who buy it tend to just hoard it. They aren't going around just selling it to sell it. So it keeps a fairly stable price. So yeah, when debt is going to collapse our economy, and maybe we'll be able to kick the can down the road a bit farther. Maybe we'll be able to restart the whole thing, then recover and keep going ever upward. But most of that height that we'll get and out of that will be just inflation. And priced in gold, the stock market really won't have risen. And that's what a lot of people don't really get. Now, that said, and I'll play devil's advocate and say that it might not be that the gold is up because of inflation. Maybe gold has just become more valuable. That's a possibility. But, and I don't really buy that because it would have become more valuable in every currency to an equal extent if it had just become more valuable. Right now, gold is making all-time highs in currencies all over the world. In the dollar, it's not really making all-time highs. It is not yet, but it's getting there. That's because the purchasing power of the currency is affecting the price of the gold, not so much just the gold itself and its own intrinsic value. Now, I've also started getting a bit more into value investing recently. Now, historically, I haven't actually done that. And I never bothered with value plays because my investing goal has almost exclusively been to preserve myself through a recession. To make sure that I have the means when everything goes to shit to kind of keep my shit together. But now I've kind of gotten into value investing. A lot of stocks are at reasonable levels to buy at. And on the assumption that we will at some point recover from this recession, from this downturn. Maybe a depression. And don't know. Too early to tell. But it is possible that we'll recover. And I'd like to have some real gains. And not just protection. So I've bought some Carnival Cruise Line stocks. They're trading at $11 right now. They tend to fluctuate between, I'd say, the low right now is around $8. Or is an all-time low. At least as far back as I looked on the charts. I don't go all the way back to the beginning of a company unless the company is really new. So don't quote me on that one. But the highs tend to be around. But the highs are around $40, $50. They generally trade within that range. The stocks have traded within that range over time. So I'm looking to get at least a 300% return on my investments. Also started buying some dividend stocks.